Good morning and welcome back to Almus Market Mornings. It's the tale of two currencies. On one hand, we have seen remarkable resilience in Chinese yuan against the dollar. On the other hand, rupee on the path of weakness, almost cracked rupees 90 against the dollar. Now, why this also matters is because CNH INR continues to move higher. Remember, we run a very large trade deficit with China. So let's understand all of this today. Good morning, JK. What's your hot take on this topic?
Good morning, Swaraj. Yeah, of course, rupees weakness is very prominently seen in the last 1 year. We have been falling even as dollar has been falling against other currencies. Yes, Chinese yuan also stands out because of we have hit an all-time low against the Chinese yuan, and just a perspective, rupee has even fallen around 4% against the Pakistani rupee, their closest neighbor. Yesterday, of course, we hit a new all-time low and crossed 90 post the OTC market close. Once again, there was a little intervention from RBI. Seems like they have been doing only some smoothening operations. Uh, Although market will take some time to break 90 conclusively, uh, because it's also a psychological level, and dollar has been weakening overseas once again a little bit, and not it, Asian currencies are also somewhat stronger, and global sentiment has been you know weak sorry strong on the risk, and we also see the possibility of Fed rate cuts happening, with Dow being touted as a new appointee for the Fed chair. So all these things might keep the rupee, somewhat less volatile, or maybe weakening with less momentum, but the direction is not changing. In fact, currently rupee is one of the most undervalued currencies among the Asians. It's even more overvalued. Undervalued compared to many other EM currencies. But that's not going to change, despite it being one of the worst year for the rupee, where we have already fallen 5%. Also, we can see that the currencies can remain undervalued for a long periods of time until the factors which are actually leading to the weakness can change. But I'm also noticing that in the very short term, the cost of holding long positions in dollar versus the INR is rising, and 1 month premium has now shot up to 19 paisa. What is also seen is that RBI is allowing the short position or their market sales done earlier, which are maturing now, uh, to flow into the market, which means it's increasing the dollar liquidity. So as dollar liquidity increases, they're also sucking out the rupee liquidity. That means the rupee becomes short. The market will probably hesitate to buy more dollars when it's already long in the dollar liquidity. That could be one factor also, which can stop the near term continuation of the weakness in the rupee. But nothing has changed otherwise as far as the flow pattern is concerned. FIs continue to sell stocks, and there is outflow. One factor that I has observed is that in the rupee weakness is also started to impact the stock market. Yesterday, while all of the markets were doing well, India was on the negative side. So that's another factor to note. So yes, we are at a point where we can stall for some time, but probably not changing the direction unless something new happens from the central bank, apart from actual intervention of selling dollars. Just of course, before we move to other points, I just observed that the big figure of 60 to 70 for the rupee took about 5 years, 70 to 80 took about 4 years, and 80 to 90 is about 3 years. And should we look at 100 in next 2 years? I hope history does not repeat. On the global market side, I think the risk sentiment was continued to be better. yesterday. Dow and the Nasdaq rallying for sixth consecutive day. These all on expectations that Fed is going to cut rates in December. In fact, President Donald Trump has also said that he would be announcing his choice to succeed Powell in early next year, in January itself. So that would be probably definite dove. Mr. Hassett's name being mostly mentioned in the markets, and the betting market is also saying that 80% probability of he being appointed as the new Fed chairman. On the European side, we had a consumer price inflation rising to 2.2%, higher than expected. And that actually also has given more credence to the fact that ECB will hold their rates unchanged. Of course, the services side inflation is impacting the overall price levels in Eurozone. It's also giving some support to the euro, as the US yields are subdued, but European yields have been slightly on the rise. So the euro is trying to again test the 1.1650 key level. Importantly, the dips have been, once again bought. Also important to note that historically December is a soft month for the dollar. There are times when dollar has fallen substantially in the month of December. So that's a thing to note. Another interesting thing I observed, Raj, was one of the large retailers in US, Costco, has actually filed a suit against the federal government to refund the tariffs collected from them, because that has affected their business, and they are pursuing this to get the refund. And they're uh, the expectation is, or rather the speculation is, whether other large companies will also join the suit, and whether their strategies to fend off the higher costs will be met by the Fed government. So I mean, nothing can be concluded by this right now, but definitely tariff issue has taken a new turn, even as the Supreme Court also is dealing with the legality of Trump tariffs, of course. We have a busy day ahead with the ADP employment data, monthly ADP number. That's important. And also we have the industrial production number, which is coming after a long time. So we'll have some updates, more updates on the US economy. PCE core inflation is also expected on Friday. So another update on the inflation is expected. Friday is also important because RBI will be holding their press conference after a rate decision. And most likely now the tide is turning towards a hold, particularly when the rupee is weakening. So possibly they hold back. If no, particularly if the inflation continues to be softer in the coming month as well, then you can expect a rate cut in the next month. My bet is that this month, probably, I'm just changing my perspective, that this month they hold back a rate cut and keep the powder dry. Yeah. Thank you.
Thank you, JK. And just quickly summarizing, risk sentiment on the global market shows better as expectations are building up for a Fed cut in December. Also, on the sidelines, President Trump is also planning to announce a successor to Chair Powell, and generally there is an expectation that that person will be a dove favoring lower rates. So that's another important development. Euro is garnering support as EU yields rise, and there is no rate cuts in sight. While for US, we are observing yields falling in anticipation of rate cuts. Otherwise, when it comes to rupee, continue to hit all-time lows against the dollar, even against the Chinese yuan. Yesterday in the post OTC market close session, we saw 9 rupees 90 also being tested. All this happening while other Asian currencies have been doing well against the dollar. We are also seeing some rise in forward premium. The 1 month premium is now at 19 paise. So there has been some rise over there. Flows continue to be negative. FIs are selling Indian equities. That's also keeping affecting the rupee. That's it from Australia. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.